What's up, guys? This is Meta on the daily chart, and we started to finally head south. Now, remember what I've been saying all along. If you use this blue channel over here, the longer the price stays outside the channel, the higher the chance of the stock to go back into the channel. Now, you can see that Meta has the peak of the volume over here at 162, and we are currently at 179. So that makes me believe that we are heading south. Also, we have the 5 days double exponential moving out. Let me zoom in a little bit more. We have the 5 days double exponential moving average going down, crossed below the 20, that is curling, and probably that is going to start to head south as well. The 50 days double exponential moving average instead is still pointing up, but it looks like it's starting to curl. So this probably will curl over time. All the other indicators as are right now bearish. This is the MACD, is crossed to the bears. However, we're still above the zero line. This is the RSI and is starting to go down. We are around the 59 level. So if it goes below 50, then we can see severe downside. And the PMO is crossed to the bears, still way above the zero, but is pointing down. So overall, we have some bearish activity, and more, even more, we have a gap to fill that is over here. Okay, that's gap is around 175, I believe. Let's see, yeah, 175. The second gap is down here at 153. That's the gap. Okay, so what I would expect is for the price to head south over here and fill this gap, and then from here maybe bounce a bit more, come down, cross below, and probably, oops, didn't mean to do that, and probably come down, retest this level. Okay, going south, maybe staying here, and then eventually cross down and go down. That's what I would expect. Now, if we break this line over here, let me draw it for you. If we break this level, then we can play out Fibonacci, and I'm gonna draw this for you here. So Fibonacci will look like this. 161% move, it's around 151, which is exactly the gap fill. That's what I would expect. And also because the channel is going down here, we probably, can approach and retest the channel. This is what I'm looking for Meta at the moment. Um, we have had, the stock is kind of going down. The volume is still kind of higher than average or close to average, so it's going down on a good volume. And as of right now, I've started a couple of put options that are mid long dated. I mean, they expire in September. I like to play safe, and I bought it basically on this down move. And yesterday I've added some more when Meta when was up probably almost 0.7%. And of course, these puts are now already up 18%, which is great if you consider that that is a return that I've had in not even 2 days. So, what I'm looking for with these puts is this gap fill, and then I'll probably sell some. And then, if it bounce, I'll either sell it all or I'll add some more. I just need to see at that point on a shorter time frame how the chart looks like. So I want to do that right now with you very quick. On the 4 hours time frame, the we had this cross over here, so the 20 days double exponential moving average is below the 50, which is a bearish sign. We went and retest the 50 and we sold off. So overall, it kind of looks bearish, and also the peak of the volume is down here at 98. Okay, let me zoom that in for you. Oh, I can't. All right, so the peak of the volume is here at 98, but the top of the volume is here at 162. Okay, so that's the top of the volume over here, and probably that's where we're going short term. Also, I would like to show you something else, which is the Fibonacci retracement. If we go from this low, oh, didn't pin. If we go from this low all the way to this high, the 50 retracement it's a 140, the 38% retracement is a 152, which is basically the gap fill and is the top of this. Okay, is the top of this level. So the stock could go down here, of course not in a straight line, but the stock eventually will go down here. That would be 38% Fibonacci retracement, and from here we can bounce, and it would be also a gap fill. So something to consider going forward.